Okay, dear students, we are ready to tackle everybody's favorite topic to hate, and that is taxes and tax planning. And we start with a few quotes from some famous individuals of bygone days. In this world, nothing is certain but death and taxes. Benjamin Franklin, a statesman, an inventor, an author, and more than anybody else, in my humble opinion, he was responsible for the colonies winning the war against Great Britain. Why? Because he was savvy enough to get the other superpower of the time, France, in on the side of the colonies. Really, really smart guy. Taxes are the price we pay for a civilized society. This is Oliver Wendell Holmes, a Civil War veteran and one of the longest serving Supreme Court justices. Yeah, you want to live in a civilized society? You got to pay taxes. And this goes back 4,000 years, folks, to the time of the Egyptians and other ancient civilizations. And only the little people pay taxes. Leona Helmsley, a hotel owner, a fashion designer, and a convicted tax felon. Somewhere along the line, dear students, and maybe a Walmart parking lot or online or in some feed that you get from whatever you happen to use, someone's going to tell you taxes are unconstitutional, taxes are illegal, you don't have to pay your taxes. Well, let's do a little civics lesson. There are three branches of the government. There's actually a fourth unofficial branch. That's the fourth estate, as it's called, the press. But we have the legislature, who are the representatives of the people to make the laws. The executive branch, whose job it is to enforce the laws. And the judicial branch, whose job it is to interpret the laws. Yes, and every crackpot who has gone up against the judicial system and claimed that taxes are illegal has found themselves entering the court of a buzzsaw and getting their comeuppance. No, taxes are the price we pay for a civilized society. Yeah. Slide number 2. Let's talk about taxes with regard to tax planning. Now, are we going to turn you into tax preparation experts? No. But by the time we're done with this chapter, you're going to have a pretty good idea of how the vast majority of people do their taxes. And we're going to hit this with you a few times. We have the Volunteer Income Tax Assistance program here at Southwestern. It starts in January. You sign up for the class and you sign up for the program and you get trained. And then all they ask is you donate 40 hours between February and up until April 15th when taxes are due. And I did it one year. It was a lot of fun. I was on sabbatical. I had a lot of fun. So you get college credit, and it looks good on your resume, and you get a certificate from, it's sponsored by the IRS. It's actually, in our case, it's South Bay Development Center, I think, South Bay Community Center. They actually run it, but it's at the behest of the IRS, and it's definitely an IRS certification. So about 1/3 of each dollar you go earns to pay taxes. Well, this depends on how much money you make and where in the country you live, but it's about right. About 1/3 goes to Uncle Sam and Uncle Cal, California, that is. So for that reason, May Day has become Tax Freedom Day, right? You work for the government from January 1st up until April 30th. Well, most people, it's not that long. It's not a whole 33%, but for some people it is. And then the rest of the year is yours, right? Cute. Understanding the tax rules and regulations can help you reduce your tax liability. To help you cope with the many types of taxes, you should know the current laws as they affect you. But folks, to think it's 17,000 pages is the tax code, one person's ever going to know everything about it. Make purchase and investment decisions that reduce your tax liability. Well, be careful. not all tax-advantaged investments are good values, especially for the little people, those of us in the middle class. And we're going to learn about municipal bonds much later on that are geared toward people who are actually making a lot of money. For them, they make a lot of sense. For the vast majority of us, well, maybe, maybe not. And of course, you want to maintain complete tax records. So there goes one of your goals, right? Maybe a non-financial, well, if it's a financial goal in this case, is to organize your tax records. So there you go. Okay, if you haven't done your Chapter 1 assignment yet. Slide number 3. There are 4 types of taxes. And we're all familiar with the sales tax, taxes on purchases. And then there are various excise taxes, which are applied to certain items like tires, which are a real environmental problem, or now computer equipment. They hit you with a recycling fee. Then there are taxes on property tax, real estate tax, and a personal property tax. For example, your car. You have I think it's called the vehicle license fee, and that is a personal property tax that starts off at 2% of the purchasing price and then goes down as the car depreciates. Then there are taxes on wealth, but the vast majority of us will never be affected by these. Never, 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 never. This is for people who have made or have built up a ton of money, and now it's in the tens of millions, right? Over 10 million, 12, 14, 15, whatever it is. Everything's going to change, though, in 2025, folks. It's all going to go back to the way it was before 2017 Tax Cut Act. But this is the Republican mantra. They want to get rid of the wealth tax, but it affects a small, tiny percentage of people. And there's about 18 billionaire families that are trying to get rid of it. But before governments separated from religion, when the government and the religion was basically the same, this is how they taxed people, with a tax on wealth. You might have heard the term tithing. And the tax collectors would run around and go and see what people's net worth was like. And then they would assess a 10% penalty on it. And that's why when you read in the Bible, one of the 2 most hated groups of people were tax collectors. The other group were women. And but we don't have that. Now, you might have heard that there's some noise about taxing the wealth of people making or having over $100 million of net worth. And so, you're going to hear a lot of things about it's communist, it's socialist, but it affects a tiny percent of people if it ever sees the light of day, which it probably won't, because the Republicans will chain themselves together and lie down on the floor of the Capitol Rotunda before it ever happens. But the one that we're going to spend the most time on, and the one that affects us the most as we join the benevolent machine, is the tax on earnings, the income tax. And this is where people say, it's not illegal, it's not. Yes, it is. Yes, it is. There was a amendment to the Constitution that allowed taxes on earnings. And then there is a 5th type of tax on slide number 4. It's not really a tax, it's actually contributions to a mandatory retirement and a health plan. But we could think of it as tax. In fact, they are often called payroll taxes. Social Security contributions taxes are 6.2% of your gross salary until you reach, I forget what the number is, 140 or whatever it is, 140,000, and then they go away. And this is another form of contention between the 2 parties, because the Democrats want it to continue for very wealthy people and the Republicans don't want it to continue. And then there's the Medicare contribution, 1.45% of your gross salary. So it turns out to be 6.75%. We're just going to use 8% when we do the worksheet, okay? So, but it's actually 6.75%. And if you're self-employed, you pay almost twice this amount. Why is that? Well, I know you don't like your boss, and maybe for good reason, but every time you pay into Social Security and Medicare, your boss has to match that. 7.65%. So if you're your own boss, you have to pay your own and the employer's portion because you're self-employed. Now it's not quite double. There's a little caveat there. They let you deduct the employer's part because you're an employer, but it's the same idea. You're going to pay about twice as much as an individual who works for somebody else. And as we said at the bottom, they're not technically taxes, but for personal financial planning purposes, it makes sense for us to think of them as taxes, and you'll hear them called payroll taxes. So what we're going to do now is ask ourselves, how much does it really cost? Okay? Because we don't think about this when we walk into that Best Buy, and go out and buy that, whatever it is, boombox, stereo, whatever, $299. So you walk in there because you got to have it. It's really nice. Maybe one of those JBL or Sony boom boxes that can power a whole party, portable, and I think you can throw them in the water. I wouldn't do that, but so $299. You walk out of there. No, you have to pay the sales tax. In some counties it's 8%. Some parts of the county it's 8%, 7.75%. I think National City is the highest. So let's say it's 8%. That's $23.92. So we walk out of Best Buy at $322.92. Well, it actually cost us a whole lot more. Huh? What? Well, remember, you had to earn that money. Now, if somebody gave you that money, yeah, that's all you had to pay. But if you had to earn that money, and those of you who get a paycheck, you see this, right? Before you get your money, the feds, Uncle Sam, and the state of California, Uncle Cal, have taken some dollars out, withholding tax. And let's say you're in the 22% bracket. Now, we're going to spend a lot of time on these marginal tax brackets, but a lot of people, once they get into the middle class, are hitting the 22% tax bracket. So let's use that. And then the brackets for the state don't match. So they're 4, 6, 7, I forget what they are, but they're all over the map. And so let's use 7%. That means you had to earn an additional $112.14 to pay your federal income tax and $35.68 to pay your California tax. So your subtotal is $147.82. So now you've paid $470.74. But wait a minute, you also had to pay the 7.65%, $39, to the Social Security and Medicare system. So that after-tax cost of the stereo actually winds up being $509.74. Do you think about this when you walk into that Best Buy or the Target or the Walmart, whatever it is, and you plunk down that cash? Do you think about how much it actually cost you? Well, after today, you will. We want you to think about this. When you make purchases, you have two, at least in the state of California, some states don't charge income taxes. You have two partners, Uncle Sam and Uncle Cal. Oh well, you don't believe me, do you? Well, let's take a look at the formula. It's actually pretty straightforward. To calculate how much it really costs us, we take the out-of-pocket expense, which includes any excise taxes or sales taxes, and we divide it by 1, which is 100%, minus the marginal tax rate. Now, this marginal tax rate, I know you're going to hate it, and you're going to want to hope it disappears, but no, don't do that. We need to understand our marginal tax rate. So our out-of-pocket expense was $322.92. To find the real cost, the total cost, we have to divide that by 1 minus the marginal tax rate. And that, what we do is we add the feds, 22%, plus the state, 7%, plus the Medicare and Social Security, 7.65%. Now, when we do the worksheet, we just change the 7.65 to 8% because it just makes it a lot easier. You got to add these three together first, then subtract 1, and you find that $322.92 stereo actually cost you $509.74. $2.74. Now, is there anything you can do about this? Well, sure. You could find a deserted island somewhere and you wouldn't have to pay taxes. But of course, then you got to find shelter and food and water, and got to defend yourself. And what happens if you need certain drugs? And taxes are the price we pay to live in a civilized society. So go ahead, complain about taxes, but realize we're all in this together, folks. And people, they love to complain about taxes, and they're usually the same people who say, why isn't the government doing anything about this? Because it costs money. And you want your taxes to go up? And they complain and complain, and then they put their hands over their hearts, or they salute as that aircraft carrier floats by, leaving Coronado. Do you realize how much it costs to keep that thing floating at the dock? Let alone taking it out to the Westpac or India. Yeah, right. Taxes, yeah. Complain about them, but they're part of our society. Okay. Now, in the face-to-face class, we would stop and pass out the worksheets, the actual cost worksheet. So I want you to do that. There's a answer key and a commentary. So make sure you do that, because it's going to be on the exam. But more importantly, this is part of the inculcation. You like that word? It means we're trying to get you to think about being frugal. We shouldn't use that word. It's a bad word. But we want you to think about all the things we spend things on and don't even realize how much we're actually spending on it. And we'll come back to this theme later on. But you already saw, or I hope you've done your cash flow statement and have seen where there's places where you can cut back. Maybe yes, maybe no. I don't know. Slide number 7. Let's get started on thinking about filing our federal income tax. We're going to come back to this in our second presentation, and that's the big slog, folks. We're going to spend a lot of time learning how to do a typical homeowner's 1040 form, the federal income taxes. But let's first ask, who must file? Well, if you're single and you've made over $13,850, or if you're married and made $27,700, you notice that's double that. And then there's a few other status categories that we'd have to look up the numbers for. You definitely have to file. But even if you didn't make that much, in reality, you should file. Why? Because first of all, you want your refund, because they're not going to send it to you unless you file. They're not going to call you up and say, hey, Fred, you didn't file. We got $487 here that we want to give you. No, they're not going to do that, all right? And you have, I think, 3 years until, sorry, you ain't going to get it back. And if you have children and don't make a whole lot of money, you might be able to claim the earned income credit, which is, think of it like a reverse income tax. We don't want you to stop working. And we realize that you ain't making enough money to make ends meet. You got kids. So we're going to give you some money. That's what the earned income credit is. And again, the Republicans don't like this and scream and holler. But it actually helps a lot of people get by. And as we said, there are various filing statuses. Most people are going to file into single or married filing jointly. Marrying filing separately is something you don't normally want to do unless there's knives and court orders involved. If you're still amicably together, file jointly. Now, there might be some situations where filing separately makes sense, but no. It usually makes more sense to file jointly. Head of household is an interesting situation. This is a single parent, or maybe they have an elderly person they're taking care of. But here's where people get in trouble. There's a couple and they have a child and they separate, divorce or whatever, and they both claim head of household. No. Eventually, the IRS's computers are going to say, hey, these people are married and they're using the same person as their head of household. And so eventually, only one of them can do it. Now, if you lose your spouse, sadly, to death, they allow you to, I think it's just 2 years, though. They allow you to file as if you were still married, I think for 2 years, and then you got to file single. I think that's how it works. So you get to, pay fewer taxes for those 2 years after the person your spouse has passed away. Cool? Okay. Slide number 8. What tax records should you keep? Well, I keep everything. Tax forms and instruction booklets. Well, you don't need those after a couple of years. You can throw those away. Your numbers, previous tax returns are very important. The W-2 forms, the little snitch that your employer sends you. Any 1099s, which are income that you've earned from interest, self-employment, other types of income. And then 1098, which is interest you have paid, typically mortgage. And we'll see a typical homeowner's tax return in our next presentation. Receipts, documentation, investment, business expense records. Yeah, I keep it all. But how long should you keep it? Now, this is a source of confusion. Some people say 7 years, some people say 3 years. Well, here's what the IRS says. The IRS says 3 years from the date the return was due or filed, or 2 years from the date the tax was paid, whichever is longer. So for most people who file their taxes on time, it's going to be 3 years. But then the IRS also says you should keep some records longer. But they don't say which records, and they don't say for how long. Thanks a lot, guys. Thanks a lot, gals. So I says keep them forever. Now, we have taxes going back many, many years. And every year I look at these boxes and I say, I'm going to scan everything and put it on a CD and store it away somewhere where it can't go. And then I go down and lie down and have a nap because it's just, oh boy. But hey, this is what you're up against. Slide number 10. Now, we're going to spend some time, actually, as we go through the Form 1040, the tax return in the next presentation, we're going to keep referring back to this Tax Cut Act of 2017, which was basically the only thing the Republicans did when Trump was in power. It introduced many changes to the tax code. Some changes were politically divisive and hurt states that are primarily Democratic, such as California. They really came after California. The tax cuts went overwhelmingly to the rich. Estimates range from 62% to 83% of the cuts go to those in the top 1%. It did increase the federal deficit more than $500 billion to $1.7 billion. It actually looks like it's going to be $4 or $5 trillion. And some people get angry at me. They say, "Oh, you hate Trump." Well, yeah, I do, but not for this. I mean, this was one of the least things that I hate him for. But this was definitely a gift to the wealthy, which Trump said he was going to do, and he's saying it now. He's saying if I win the White House, I'm going to give more tax cuts to the very wealthy. He told that one group, "You got to give me at least $1 billion for my campaign, and I will give you many, many billions back." Nothing like a corporate bribe, huh? Corporate tax cuts are permanent, but the individual tax cuts phase out after 8 years. So this is the craziest thing about it. They sunset all the provisions of the 2017 Tax Cut Act after 2025. So after 2025, it all goes back to the way it was beforehand. Yeah. The corporate tax rates were slashed from 35% down to 21%. This was supposed to spur investment and spur wage gains to the employees. And surprise, they were disproportionately given back to the shareholders and the people the corporate CEOs and the like. Folks, it pays to be rich. What can I say? It really does. Yeah. So now, get angry at me. I apologize. I'm just telling you what I saw. What can I say? You might have a different spin on it. Come tell me what you think about it. But this was a gift to the rich, and we'll see what happens. Vote carefully because your livelihood, your world depends on it. And that's our first presentation. So go back over, make sure you understand about taxes, the different types of taxes, and especially make sure you do that worksheet because we're going to ask you on the exam. But more importantly, We want you to think about this when you walk into a store now and buy something. And that's why on the worksheet, you're going to do, a trip to Cancun and a used car, and then do, maybe you go out to dinner for $50, whatever. That's why there's some places where it says you decide. But do make sure you do these, because on the exam, you're going to try to do, if you don't go through them, you're going to try to do them all wrong. And I'm going to say, why didn't you go through the, please? And then I'm going to ask you to do it again. Go through the worksheet, because you really need to know this. Forget about the grade. More importantly is you should really understand how much it really costs. Okay. In our next presentation, we're going to slog through a typical tax return for a homeowner, and you'll see that it's tedious, it's overly complex, it's mind-bogglingly boring, but it really isn't that hard once you've done it a few times. And that's why we have a text exercise number 1, we have the text exercise number 2, and then you're going to do the assignment, and you just do them all thou likewise, and become one of the volunteers for the VITA, and you will become on your way to becoming a text prepare expert, which, can be pretty lucrative. Thank you so much for being in our class. We are so, so proud of you, dear students. See you in our next presentation.